Welcome to Behind the Business. I'm Faheem Sabja, and on every episode, we go beyond the business plans and discover the real life and untold stories of today's entrepreneurs. It's time for the people behind the business. Let's get into it.
Thanks so much for joining. I really appreciate it, man. I know we've talked before, and a big reason why I wanted to have you on is because your perspective is really unique. So I'm going to put you right on the spot. Okay. So we're going to start right away. So I'm giving you a scenario. It's closing in on graduation with your MBA, and you're actively choosing not to go down the path of what I think a lot of folks after they do their MBA do and look at, top companies, Fortune 500, larger executive roles. You're choosing your own path and starting something on your own. Why did you choose that path? Tell me a bit about the search fund itself, and then how did you decide to do it?
Okay, so important to note that I didn't do it right out of school.
Okay, fair enough.
Okay, so I did take a different path than most. So I actually had looked at the search fund, and the reason that I didn't do it was because I had a background in HVAC, and I looked at doing a roll-up strategy. Spoke with a guy, was in conversation at buying around 8 times EBITDA.
Sure. Yeah.
That guy ended up selling to a private equity firm for 13 times.
Wow.
And I just went, no, I'm not doing this. I'm going to go do something else because it was just a little too intimidating. I didn't have the finance background.
Yeah.
So honestly, a big part of it was I felt intimidated to do a search fund.
Got it.
What I ended up doing was I wanted to do something. I had already started a business on my own that was sort of running.
Yep.
But it wasn't full-time. So I looked for the next full-time thing. I wanted it to be a small company, around 100 employees. So I ended up taking a job doing international development.
Nice.
I won't get into what all of that was, but about a year and a half after that was sort of, hey, I'm not that happy here.
Yeah.
Why don't I go and start something, right? Sort of some soul searching, if you will.
Sure.
And I thought it would make sense to do a search fund at that time. And so my route was a little bit different than most doing a search fund.
Yeah, fair enough.
But it was on the mind early on during the MBA.
Do you think that time after the MBA of, kind of doing a little bit of soul searching was instrumental, helpful in actually going down the path of developing a search fund on your own?
I think so, in that I got to own a P&L and create one from scratch on the international side. Yeah. And the part that I was most hesitant on was the finance side.
Right.
And I had thought, if I'm going to do a search fund, I need to do a partnered search because I'm the ops guy. I need the finance guy. I know how to do all of this. But for me, it was, actually, I got finance.
Yeah.
Not perfectly for sure. And I didn't understand how deals worked, but it was, I figured out the P&L thing pretty quick. I think I can figure this out.
Yeah, exactly. I think a lot of folks kind of get intimidated by the concept of a search fund. So I want to boil it down. So in your mind, when you were thinking about the search fund model, what was it about the model that said to you, this is what I want to do? And let's boil it down to as simple as what it is.
For me, the search fund model, what's beautiful about it is you're going to acquire just one business and you're going to be the one running it. And that was very appealing to me, just to be the one in charge. On the side of what was intimidating was, I don't know how to close a deal. What goes into diligence?
For sure. Exactly.
Right? What makes a good business? I have a pretty good sense for it. But when I'm looking at financials, what makes a good business? How do I determine that kind of thing? And so there's lots of different ways to do a search fund. And you're taught things, right? I took an ETA class, or entrepreneurship through acquisition, right?
Yeah.
And I learned a lot of different ways to do it. There's self-funded, there's traditional, you name it. There's a lot of ways to do it.
Exactly.
And for me, I decided to go the traditional route because of the support that it brings and the support of learning, right? And so there's a lot of people that maybe come from private equity or iBanking and things that I would say, hey, maybe you don't need a traditional search fund, right? Unless you just want the comfort of a paycheck.
Right.
But for me, it was what I really need is I need a support network that can help me and can give me templates and can walk me through how do I do these things.
For sure.
So my process for determining how and if I was going to search was talking to a lot of other searchers and talking to investors and saying, what do you provide? or to the searcher, what was your experience?
Yeah.
And then I was able to get back the feedback that made sense for me. It said, yeah, traditional is what makes sense.
Awesome. And you've taken on investors as a part of your search fund. Tell me about that process. Selecting your investors or even going out to speak to them. What was that like?
Yeah, so again, my experience was probably different than most. If you're in an MBA and you're actively looking to do a search, you have 6 months to a year to sort of court your investors. For me, I had left my job and ended up sort of looking at, all right, I've got a window here. I need to find my next thing. Ended up raising in about 3 months.
Nice.
So a little bit more fast-paced, I would say, than most. If you have more time, I say do that, because getting to know your investors is important. You're interacting with these guys a lot.
Right.
You can align very much on the investment strategy, and being aligned with your investors is important, because ultimately, if they don't like the businesses that you like, it's going to be a hard time acquiring that business.
For sure.
But in terms of the process, like you're asking, so for me, it was early on, I just started calling people, even though I had no idea really what I was doing, and I would just ask a lot of questions. Okay, tell me about your firm. Tell me who you invest in, why you invest in, what's the history.
Right.
You know, and I'd get asked questions like, oh, have you done your PPM? And I'm like, what is that? Right. I mean, now if I said, I feel silly now, but at the time I had no idea.
Yeah.
So I learned sort of under the gun, and I probably lost the opportunity to have some investors doing that.
Sure.
I should have maybe talked to more searchers that way. But ultimately, it started with, hey, I called some friends who had done searches. Who would you recommend I reach out to? I got some emails for 10 people. Reach out to them.
Nice.
And then when talking to them, who else do you guys recommend? Who else do you work with? And so on. And so I ultimately ended up speaking with probably around 30 or 40 different institutional investors and individual investors.
Nice.
Across the board, and understanding what they wanted, but ultimately building out my investment thesis.
Right.
And what I bring to the table, so that I could then go and ask for money.
Yeah, it makes sense. I think that process is probably daunting for a lot of people, and it's nice to see that you've taken the gritty approach and just outreach, right? Just calling people and being really open about what it is that you want to do, and then being open to learning along the way as well. Let's talk a little bit about Snow Crane as well.
Yeah.
That's the fund you've set up. What are you looking for, and how's that process been so far?
Yeah, so Snow Crane, first of all, the Snow Crane is like an ode to Japan, by the way. So
Got it.
that's where the name comes from.
Okay.
The fund has been amazing. My focus has been on industrials. So my background is in air conditioning, and both from the manufacturing side and marketing. And so it's a world that I understand, and I feel like differentiates me from a lot of searchers is, now there's still people doing industrials and with that kind of experience, but there's a lot more that are focusing elsewhere and don't have the industrial experience. Mm-hmm. And so I'm able to differentiate in terms of communicating with sellers, right? I can relate with them a little bit more and speak their language quicker.
Right.
And so that's really been the focus area. But industrials is broad. Right. So it's manufacturing, it's industrial services, whether it's cleaning or chemical cleanup, environmental, anything can be that way, right? I mean, almost anything that's serving an industrial purpose could be industrial software. And so I've intentionally left it very broad, but it has changed over time, for sure, right? My focus and as well as my approach has also changed.
Interesting. So you went into forming Snow Crane under a different approach or a different industry that you thought you would target, and things have changed along the way?
Yeah, so when I went into it, I initially thought, hey, I'm going to target manufacturing, right? I have a degree in my undergrad in manufacturing engineering. I did manufacturing actively. And when I looked, what I found was the majority of manufacturing businesses are pretty low margin. And that's hard to get investors on board with. And it's hard as well to grow, because when you have low margin business, you have to grow the top line so much to grow the bottom line little. Right? Versus, if you had, say, 50% EBITDA margin or something like that, right? It's very easy to grow that bottom line with just a little bit of increased sales. Mm-hmm. So it was something that was, I'm I need to take a different look at manufacturing, and I probably need to broaden my scope a little bit because the majority of what I'm hitting is not that appealing.
Yeah, that makes sense. It's interesting to hear that you learned that along the way, right? Did you find that you had to go back to your investors or even your initial investment thesis and say, okay, this isn't working. I've learned that precisely manufacturing may not be the exact kind of type of industrial I want to go to, but I'm going to focus on a more broader lens. Did you have to go back to your investors and kind of sell them on that idea, or were they comfortable with you making your own decision on it?
I would say for the most part, they're comfortable, but it is something that you're talking about, and they'll provide their feedback to as well.
Awesome.
Right? So I'm going to interact with them and say, hey, this isn't exactly what I wanted. Here's sort of where I'm looking. And they can say, oh, have you looked in this place?
Amazing.
Have you looked over here? At the same time, though, I would also say sometimes you get feedback from search fund investors that they have their own thesis on what makes sense.
Right.
And so you'll get feedback sometimes that says, hey, I actually don't like that kind of business that you're looking at. We wouldn't invest in that. And initially for me, that was, okay, I got to turn this off. But as I've learned and as I've stayed involved, it's actually more of a, okay, that's one opinion.
Right.
And I can choose to still pursue this and be happy with that and still get a deal done despite maybe an investor not liking a specific space.
Got it. Yeah, it seems like a fine balance, right? Where you also want to make sure that you're keeping your investor up to date on all the changes or updates or your entire process, but making sure that you also own that process.
Yeah.
That it's at the end of the day going to be your business that you'll operate, right? And as a searcher, and we've talked about this in the past too, right? That's what's appealing for the search fund route. That
Right.
It's going to be your business. You're going to operate it. So I'm going to take it more down the path of your own experience personally now. I know the search fund process for a lot of folks is difficult because you almost feel like you're doing it on your own. And you do have an investor network that's going to help you, which is wonderful to hear. But it's also something that you want to have your family's opinion on, your family's buy-in on. How's that process been like for you and getting them comfortable with the idea of you searching as a part of this, 1-2 year process?
There's a lot there to talk about for sure. So again, family, married with 3 kids, my oldest being 8, youngest being 3. So there's a lot to take in. When we started the search process, we had actually just bought a house that we'd built.
Wow.
So it was left the job and it was sort of, okay, up in the air.
Wow.
What's going to happen with our lives? And so raising the fund initially was very much anywhere in the U.S. We could move, we could do all these things. And that put a lot of strain on our household, right? Because now, are we moving? And it's a learning process for me, but it's also a learning process for my spouse because she's now getting, I would come in and say, hey, I found this cool business. It's in North Dakota. Right?
Yeah.
And then I'd come out of my next meeting or something and she's been spending time on Zillow looking at houses in North Dakota. It's like, wait a minute. Whoa, we're not even close.
Yeah.
Right? And so she's learning, how much to buy into something and how much not to. But it's just the nature of being in a search fund and being completely unknown what's going to happen in the future. So we had to shift. We sort of said, okay, we're still willing to move. We're still going to look everywhere, but first, let's look at places that are local and we won't have to move.
Right.
And that took, some strain off. And then there's other things, right? There's levels of communication. How much do I communicate with my spouse? How much does she want to know versus how much does she need to hear? How far into a process before we start actually talking about something? Mm-hmm. And so there's some different give and take, right? Yep. Depending on where you are in life. Or if you're a single guy with nothing holding you back, that's probably not a stress point.
Yeah.
But for me, that was a big one. And then you sort of mentioned, loneliness, just doing it by yourself. Again, looked at, should I do a partnered search? And I think there are pros to that.
Yeah.
And there are also cons. One of the pros being you've got a partner.
Yep.
You can talk to somebody about something. The con being you guys have to agree on a business and already something that's hard to pick and land.
For sure.
So for me, I spent a lot of time, especially at the beginning, on the phone with either other searchers or people in my cap table, especially people that were maybe not institutional investors.
For sure.
People that I felt like I could be a little bit more informal with and spend time on the phone with them. And over time, you get more used to it and more used to those things. But I also say, for the searcher, it's pretty important to get out, have lunches with people.
For sure.
Connect in a way in person.
Yeah.
Which I've actually even leaned on with sellers, right? And building relationships with sellers that are local and having lunches and things maybe earlier than others might.
Sure.
Just to have that social interaction.
Yeah. Yeah. No, that makes a lot of sense. I think it's funny. My wife and I talk about this quite frequently. And I think it's not only searchers that go through this process. I think it's entrepreneurs in general who are just starting something from scratch and may not have gone down the partner route because they want autonomy. They want sole decision-making authority. But in reality, that process is kind of lonely. Like it's something that you kind of have to get used to. And I really like that you talked about, you kind of have to figure out how much to share with your spouse, right? And not from the perspective of, not being open, but more so that way there's understanding of how far along we are in the process with building something, acquiring something, maybe looking at a real opportunity to move or not. And that must have been, difficult to figure out that fine balance, right?
Yeah. And it's not just, right, it's not one-sided.
Yeah.
Right? So initially, my spouse wants to know. And I'm telling her, and she's buying in. And then we sort of went the total opposite direction. It was like, okay, we're not talking about this at all.
Yeah.
And that didn't really work either. But as we learned, now I can bring her, hey, check out this cool business. Oh, do you like it? And she can ask how it's going, but not get so bought in.
Yeah.
Right? And so it's an evolving piece, right? I don't think there's any, I could say, hey, do it this way, and you'd avoid any of that. It doesn't really matter. You're going to evolve over time and change.
Right.
But being really in tune and being willing to have that communication is key.
Yeah, it's really cool to see that because I think the searchers that I've met, a lot of them are single, or they're in a new relationship. They may not have kids. They may not have just built a house, right? So when you first made that decision, you went into it knowing like, okay, I have to make sure that I have all of this family, my current situation set up and doing this the right way. So that first step when you were like, okay, I'm going to do this, how did that first conversation with your spouse go to be like, okay, this is the path? What do you think?
I mean, I've always felt very supported.
Amazing.
Right? In sort of anything. And so we've always sort of thought it'll always work out, regardless of what it is. I will say the initial reaction was like, oh, okay. Tell me about what that means. Right? Yeah. And so you have to explain the process, right? She didn't go to the ETA class and learn these things. And so but we knew people who had done it.
Nice.
And she knew them. And so we actually put her in touch with some of those families as well, talk through their experience. But it wasn't just, also while raising the fund, there were still questions. Even though I was actively raising and felt 100% committed, it was still, okay, is this right? Until that money hits the bank account and it's done, it's like, is this actually going to happen?
Right. Yeah. Like, are we making the right choice in doing this?
Yeah.
Yeah. I want to take it back to the business a little bit. I think a lot of people think about starting a search fund or even think about acquiring businesses. And right now, in my opinion, there's this kind of sexy trend of looking to acquire small businesses, looking to make acquisitions in the, $50,000 to $500,000 EBITDA range, these small enterprises. It's almost become like you see them very often on social media, these opportunities. How do those types of trends make you feel when you're running like a real operational search fund?
I mean, I think they're great for some people. And sometimes I come across small businesses and frankly, it's like, oh man, this is too small for me to bring to my investors. I could go get an SBA loan and buy this kind of business, right? And then I own it a higher percentage. Right. I don't have investors to report to. Is this right? You find yourself questioning those things sometimes. So I think it's those are great paths,
Awesome.
especially if you know what you're doing from an acquisition standpoint.
Mm-hmm.
It can be really lucrative. It can allow you a lot of freedom. What I'm doing with a traditional search fund is a little bit bigger.
Mm-hmm.
You have funding in place. You're learning more of the private equity processes,
Mm-hmm.
right? And by the way, you can do a search fund that's, through an accelerator, for example, where you're not going to learn all of this stuff. A lot of these guys are going to help you through all of this, and you don't have to learn the nitty gritty.
Right.
But for me, that learning process has been one of the best parts about the search fund.
Awesome.
Is I've learned all about acquisitions, and I've gone through, small 2 million EBITDA businesses, and then looked at acquiring a 20 million EBITDA business.
Right.
I had to go outside my cap table and acted more like an independent sponsor. And so there's a lot of different levels of learning and understanding.
Yeah.
And so, when I look at those smaller ones, I think that's awesome and that's great. I think they're, if that's all you do, you might be missing the bigger vision of what deals look like at a larger scale.
Right. That makes sense. Give me some of the flavor or some personal experience that you've gone through Snow Crane of a deal that maybe didn't go the way you wanted, even though you thought it was a great business at first.
Yeah. So I nearly acquired a business in the portable air conditioning space, which made a ton of sense. But this was, for me, I have HVAC manufacturing experience.
Mm-hmm.
It would have been easy to step in. Got along really well with the seller. Everything seemed to be in place. To be honest, my investor base didn't love it. It's manufacturing, which, again, was part of the thesis, but isn't a favorite, I would say, amongst most institutional search fund investors. Mm-hmm. Some still like it, right? And some did on my cap table. But it was a harder push. They had some really amazing growth and high margins that, when you look at other businesses, usually they're saying it needs to be higher margin, it needs to have higher growth. That's usually the story is you've seen modest growth, modest margin, you think you can boost that, and the investor base will say, you need a little bit more for this to make a lot of sense. In this case, it was the growth seems a little too high, margins seem a little too high. There's no way this is sustainable.
Got it.
Right?
Kind of a too good to be true.
Yeah, kind of a too good to be true story. And so ultimately what I ended up doing is, communicating heavily with my investor base, but then also going outside. I probably spoke with outside my cap table another 30 to 40 investors. I ended up hiring an iBank to run the debt process because I just didn't have enough time to raise debt, raise equity, and due diligence all on my own. And this was, 3 months into my search. I went under LOI with this business and started chasing, and I didn't have a clue, right? I mean, I was learning rapidly.
Right.
But when I went into it, it was, okay, I'm under LOI now. I don't even know what I need to diligence.
Wow.
Right? And so for me, it was, let's learn as fast as possible. And it was an amazing experience until basically the very end. Right? So I ended up raising the capital from initially a private equity firm who we signed terms with them as a lead investor. Mm-hmm. They pulled out. I raised capital again from a family office, and just a few days before the LOI expired, they pulled out. And the reasons are interesting, and we could go into that. I'm not sure I believe or really understand all of the reasons that people pull out.
Mm-hmm.
So ultimately what I ended up doing was, okay, LOI's expired. I'm going to have to draft another one. I went and raised the money a third time, submitted basically the same LOI, and at that point the seller said, actually, the business is worth more money now.
Oh, my God.
And so I was 100% committed. We were planning to move. It was like a match made in heaven, it felt like to me. Mm-hmm. It felt like the perfect business. And it ended up falling through, and it was, I'm not going to go raise additional capital. If I can't close at this valuation, I'm not going to close at a higher valuation. And so ended up pulling out. And in hindsight, the learning alone was probably worth all the effort. Sure. I spent a large amount of my capital that I'd raised on diligence. So potentially shortened my, my total 2-year window. But the learning was invaluable.
Man.
And the strain on my home was real during that time.
Sure.
And I was working crazy hours to try and get the deal done. And then it fell apart, and it was probably, offer the best in some ways.
Sure.
For my home life and figuring out, again, sort of rapid learning in the home of what does a deal look like? How does that strain the home or, benefit the home?
That's brutal. That's tough. And I think it's tough because you put a lot of time into it. And you actually found the business pretty quickly in searching. Like 3 months is pretty quick to be able to find something that lucrative, that much of a, alignment with your thesis. What changed after the deal fell through and in your search process? Did you adapt the way you were taking a look at things? Did your style of business change? Did the size of business change? Like what changed after?
Yeah, size certainly changed because this one was much larger.
Yeah.
Right? You typically look at a typical traditional search fund is between 2 and 7 million of EBITDA. And for me, I had just attacked 20 million and was able to raise the money. And so for me, on the larger end, I wasn't intimidated anymore.
Right.
Like I could go up. I competed against private equity firms, when I was bidding and all of those things. And so for me, it was, actually,
I can do this.
I can do this at any size.
Yeah.
I'll figure it out. And so that doesn't mean that the deal flow happened at a larger size or anything, right?
Mm-hmm.
I was still learning in the search process, right? And so it was still a lot of the grind was the same in terms of sourcing. The sourcing never ended, even while I was in deep diligence. There was still, you wanted a funnel actively going. And over time, a few things changed, right? Not necessarily due to this deal, but email changed. So I started getting thrown into spam a lot more. And so how do you adjust to that?
That's when you're reaching out, doing outreach to potential businesses.
Yep. So you have marketing campaigns via email and things, which are productive and do lead to a lot of conversations. And I would say I sort of shifted to how can I get in the door without being so cold?
Yeah.
Right? How can I network or use network such that I can find my way into deals that are a little bit warmer and people trust me a little bit more.
Right.
And so recently I've been, you try different things, you do all kinds of,
course.
right? But recently, for example, HVAC services has been back on my radar.
Nice.
And I've used my network there to connect with people, take people to lunch. And the leads that I'm getting are warm leads from someone they trust, right? Someone I can talk to. They haven't closed yet, right? So still in the air whether or not this is the most effective, but each of the leads feels a little bit more tangible and warm.
Yeah. I think there's tons of great platforms out there for searchers who are looking for sellers and potential businesses to acquire, but that introduction is really important. And things like Grata, these other platforms that do email outreach, they're awesome. They're wonderful. But for searchers, in your opinion, is that introduction way more fruitful? It feels like using your background, using your experience, using your prior connections will likely get you in the door easier than cold outreach. Seems like it.
Yeah. Most sellers that you're talking to are getting, at least 5 emails a week or something, and some of them are saying they're getting 10, 15 emails a week to try and be acquired.
Yeah.
Right. And so in that front, right, they may be interested in selling, but how do you differentiate yourself?
Right.
So there's lots of different strategies to do that as well. But again, when you're cold to somebody, how do you make yourself be that person?
Right.
And then ultimately they're going to think, well, I've got 50 other opportunities behind this guy.
For sure.
Right. So if I'm not getting the terms that I like, I'll just go ask the other 50 people that have emailed me. Right. And whether or not that's going to actually work out for them is still questionable. Right.
Yep.
But if you have a warm lead and somehow you're trustworthy,
Mm-hmm.
I think that gets you a lot further, and you're able to actually have conversations that, maybe it's before they've had any other conversations and they're willing to work with you versus I'm just going to go down the street.
Yeah.
Talk to this other firm.
Yeah, it makes sense. It's interesting though, right? Because I think right now, whether you call it the silver tsunami, whether you call it, the aging boomer demographic that has built successful, great businesses that are looking to sell them, there's a massive market for buyers. I think a lot of folks forget that while there is also a massive market for sellers, there's equally as much capital out there to be able to acquire these businesses as well. And selling it to the right individual, the right searcher, is really important to maintain what's been built for so many years.
Yeah, and every seller's different, right? One seller might not care at all what happens to the business once they sell.
Right.
They want to get out 100% and be done.
Good
The
point.
next seller might want to roll equity and participate a second time in another sale, right? And so that conversation is so different. And the beauty of the search fund is you can be pretty flexible,
Yeah.
right? You can work with these guys and say, yeah, that works. And I would say the search fund versus like private equity and others, one of the benefits we have is because we're actually stepping in to run the business. When you have a retiring generation that actively wants to step away from the business, a lot of times if you're a firm, you don't have a replacement right away. So they have to stick around longer. And that's a big selling point within search community as a whole. The downside of search is because it's getting more popular, it's getting, I think, harder and harder to acquire. And you see that in the statistics that Stanford puts out, right? Like,
Yeah.
it's a declining acquisition rate. I think for a number of reasons, but I think one of those is there's just more people doing it. As an example of that, if I'm in the Dallas-Fort Worth area and I reach out to people, you can find that, people on LinkedIn or whatever, and searchers, and they will have already added this person as a friend, right? And that's just one searcher that and there's 100,000 in the area, right, that are now doing this. Now I'm not only differentiating against private equity, I'm also differentiating against other searchers, right? Which is why I think honing in on what you can differentiate is super important, right? Like industrials for me is important because I can differentiate. I can tell a story. I have a growth story that usually people they like to hear, and they go, okay, yeah, you can grow. If they're interested in potentially having a second exit, they'll look at that experience and go, oh, maybe I like this guy more than the other because he has experience with growth.
Yeah, that makes sense. I want to go back to the deal that fell through, just to go through some of the technical aspects of it. When you were organizing the cap table for that deal in particular, and you did some outreach to debt advisory, and you were doing this for the first time, how did you find the firm that was able to assist you the most, whether it was on the debt side or in raising capital? Were you doing all of it yourself before you found a partner? Was that just cold outreach as well? I mean, I think bringing on an iBank to take on debt advisory for you is not a small task, especially for a deal that big.
Yeah, I was doing it all myself at the beginning, right? So I was speaking with, 15 banks, and that's both cold outreach, but also recommendations, right? Someone on my current cap table knows somebody that I should talk to, right? So it's a lot of warm introductions.
Yeah.
And that was true on the equity side too, right? Hey, search fund investors, do you have people that you like to work with outside? And so it's initially reach out to those guys.
Nice.
They may not be interested, and then kick that over, right? So I had, I was putting together teasers and all kinds of things to send out to people to say, hey,
Got it.
would this be an investment you'd be interested in? And got a lot of interest early on. We had some that was this fund one. We really like this business. We like to invest it, but it actually doesn't meet our thesis. We can't have the first one being, right?
Got it.
Right. So there's some weird intricacies.
Yeah,
And
fair enough.
so, I mean, I guess to go back to your question more directly, yeah, I was doing it all myself. And it was calls, talking through the business. What am I adding to the business? I mean, you have to really have your stuff together to be able to get on these calls and really sell the business. I mean, you're ultimately a salesman. And that's true for the banks. The banks want the equity first.
Right.
Right? But they'll give you some terms and some idea. But on the debt side, I had no clue. Right. What are the terms of debt? Right. And I'd get some tentative term sheets back, and they're vastly different.
Right.
I didn't know what SOFR was. I'm like, okay, what is SOFR? Okay, SOFR plus 6.5. What does that mean? Like a lot of learning along the way. And I had friends, from the private equity space, from business school, otherwise that I was speaking to, and they said, hey, you should probably hire an iBank.
Got it.
Here's some people that we like.
Amazing.
I spoke with them, and you also have to sell them on it because ultimately they're typically success-based, right? So if you close, they get paid.
Amazing.
If you don't, they put in a lot of work, which, I'm sorry for these guys. I'm sorry, I didn't close. But they went and they ran a process. And so we got to see, I think ended up seeing something like 11, term sheets.
Yeah.
And I got to ask them questions about, okay, what do all these things mean?
Right.
but I also used other support systems as well, right? So, what kind of diligence do I need to do? I'm working with my search fund investors. They can provide me a list of, diligence things and check-ins. And it was found through a firm that it's a brokerage. It was not a brokered deal. This is a little bit of a weird nuance where the brokerage introduced me. So they were on a finder's fee.
Got it.
But because they had a finder's fee, they were incentivized to then help me. So I enlisted their help as well. So sometimes I'd kick over diligence.
Amazing.
Analytics. So as much as possible, I would kick things down the road. Or, hey, here's this presentation. Can you guys take a look and tell me what you think? And they would do their best to support. So there's all kinds of ways, right? Once you get into a deal, everybody wants you to get that deal done because the money falls when the deal's done.
Yeah. It's really cool hearing about it from this end because I was on the other end, on the debt side, when folks were trying to make acquisitions, and hearing it from the other side is really, I think, helpful. I don't think a lot of people have that debt experience. So you were right to instill someone else in their experience to be able to do that for you and to explain the nitty gritty, because I think often as lenders, and putting my previous hat on, we tend to forget that the terms that we use every single day are not actually widely understood. And you do need somebody to explain them properly. But oftentimes, a deal is just a potential until it gets really, really close to the finish line. So as a lender, you're actually not really, able to spend the time coaching a potential buyer, and that debt advisory firm can.
Yep.
So I'm going to go back to you now personally. Now that you've done this, you've set up your search fund model, you've gone through a deal that didn't work out. What's the outlook for you and what you're looking for now?
I mean, I always tell people, what am I looking for is a good business.
Awesome.
Right? So super open to different categories, different industries. But I've definitely focused in, and I think I mentioned earlier, on areas where I can really differentiate.
For sure.
So HVAC services, home services at large is an area I know very well and can speak that language and am well connected. And so I'm leaning on that to see, hey, can I do a rollout strategy? If you think on baseball terms, what inning are we in here? Because so many people are doing that.
Exactly.
And when I look at the industry, to me, I think we're, bottom of the sixth, right? Like I think eventually it will run out, but there's so many of these companies out there that, they've been successful, but there's so much low-hanging fruit in terms of how you can scale these businesses and how many are out there to acquire.
Right.
So I've been focusing in that area. To answer your question at large, though, I've got really probably 6 months left of capital on my search. And so the question is, all right, at the end of 6 months, I got to run hard these 6 months to try and acquire something. But if I don't, what then? And I think that can also put some strain. Well, it's not that I think. I know that it puts strain on the family, because now my family is once again in the circumstance of, okay, now what?
Yeah.
What happens when we don't have an income anymore? Are we deciding, are we going to re-up? You can always go get more money from your investors, which makes it a little bit harder to buy smaller. So, right, there's pros and cons to that. Or you can go find a normal job, which frankly would be hard to do at this point. If you're working for yourself and looking at the prospect of owning or things, do you start something? Do you, there's any number of things that go through your mind. So staying focused and saying, okay, I've got 6 months. Let me stay focused and be really diligent in this and get something done is important. And you really feel like you're in a sprint, especially as you look at all these searchers, right? I have 1.5 years of experience. And so for me, I can flip through a lot of businesses really quickly and say no relatively quickly versus, at the beginning, I was getting a lot of looks, but I just didn't know enough to be able to flip through as quickly. And so now I can move much more rapidly. Be in conversations. I've sent out, 2 LOIs in the last 2-3 months, ended up ultimately walking away due to valuation expectations and things. But, it's just running at it hard and using the experience that we've had to say, okay, we can't worry about this yet.
It's something that I have a lot of hope for you and your search, and I hope it works out, and I know it will. And I wanted to ask one more thing, maybe two. If there was somebody who's starting the search process or considering it, what would you tell them? And if you were able to speak to yourself, whether it was in business school or whether it was going through your first job afterwards, now that you know, what would you tell yourself?
Yeah, I'll answer the first one, which is, I would say talk to people.
Yeah.
Right? Talk to searchers, talk to investors. They're all open to this, right? There's more money out there than you realize, right? So the money is not necessarily an issue. You can do it, right? Talk to people, get the experience, ask for help, right? Don't be so proud that you don't ask for help. There are templates and things that will get you a long way. So if you're looking at starting a search fund, don't be intimidated that you can do it. You know, that's sort of the first thing I would say, because it's one foot in front of the other. You just take the steps. In terms of what I would tell myself, part of it would be you can do this, right? Like you can be a finance guy, right? It's still weird to me to, right? People ask me what I do, and I'm like, well, I'm in finance, technically, right? Even though, right, I real finance people might look at me like, no, you're not. But I mean, honestly, that's what I'm doing. I'm analyzing financials. I'm asking for financials, all of these things. And the other thing I would say is, just be patient and be communicative.
Yeah.
Right? With yourself, with your spouse. You don't need a partner. You don't need any of those things. Like, go learn. Everything is learnable, and put faith in your own ability to learn. Right. And so I'll use one funny example of, speaking with a business owner. He was in healthcare. I have no healthcare experience. Right.
Okay.
The business came across my desk basically, and I was like, hey, this seems like a lucrative business. Seems really good.
Sure.
Got on the phone with the seller. He'd already sold the business before, been through the process, had been in healthcare his whole career. And he basically told me, oh, you don't have healthcare experience. You can't learn this, right? It's unlearnable in the amount of time that it would take, right? And my reaction to that was, anything is learnable. Like I consider myself to be a pretty quick study at this point, right? Search fund was that way, right? And so the mentality of a lot of people is sort of like this seller, like, you can't really learn this. You can't, right? There's so much here. There's so finance is sort of beyond me or whatever. And the reality is very, very different. Like, give me 2-3 months, I'll be 80% there, right? Am I going to be 100%, like, have the deep knowledge that these people have? They've been in finance for 30 years. No, obviously not, right? There's something that they have. But can I get 80-90% of the way there in 3 months?
Sure.
Absolutely.
Yeah.
Right? I have no question that if I dedicate myself to it, I can get there. And that's how I feel about people when they approach search is, look, this isn't untenable, right? This is very achievable, very learnable. Just go get it.
It's awesome to hear you say that, because even for myself, for folks listening, I think that first step or that confidence to actually go out and do it on their own is what holds them back. The fact that you say you're a finance guy now is exactly the type of mentality that I think searchers need, or even those who are looking to start their own business, become entrepreneurs. You just need to have the mentality of, you can do this. Like, there is a path. There's folks that you can speak to, and you just need to make that first step.
Yeah.
Thanks so much for joining, Cory. I really appreciate you being on this. Thank you to everyone watching. This is meant to be for folks who are interested in becoming entrepreneurs, interested in becoming searchers, and learning throughout the way. My name is Faheem Savja.
I'm Cory Gottfredson.
Thank you for joining in this episode of Behind the Business.
Thank you for joining us on Behind the Business. I hope today's story left you a little inspired and maybe one step closer to your own entrepreneurial dreams. Behind every business, there's a person with a vision and a story worth telling. If you enjoyed today's episode, please subscribe, leave a review, or share it with a friend who may need a little inspiration too. Until next time, keep dreaming, keep building, and keep listening. This is Faheem Savja, signing off from Behind the Business.